Hey everybody, Jake here with TrendSpider to go over some of the charts this weekend. Thank you all for the really nice and positive feedback from these videos. It's motivated me to want to make more, and thank you guys so much for that. What we're going to do is go over a few charts that we went over last week and see how they've progressed into this week. And so starting with SPY, you'll see here that we've got a weekly chart set up from the February 2016 low. And so essentially anytime that we've got a low like this or a status quo changing event like the February 2016 low, which if you were trading during that time, remember this was a very crucial low within this big chunk of just absolute crazy volatility back in 2015 into early 2016. So that is why I anchored the volume weighted average price from this point. You'll notice since this point, when the volume weighted average price was moving up with price, you'll see when the price did take a pullback here in 2016 and in 2016 later in the year, both of these times respected the anchored VWAP here. Notice that we really started to move up really far from this area and then finally retested this area on December 2018. This particular capitulation point was pretty intense. So we did have, some of that margin of error there around the line, and this is actually what created these support lines here for a potential retest down below if the market did continue down. So getting into that a little bit later, notice that the anchored VWAP has now started to act as resistance. This is very important because generally we were looking at this area to be a bottom in the market. Now we're looking at this area to be a possible top within a dead cat bounce. And so we'll just have to see what happens. But just from a anchored VWAP perspective, we closed below the anchored VWAP both weeks. Notice we closed around 253. We opened right at the anchored VWAP at 255 and then closed at 248. But if you really look at these two wicks, notice what really happens here. Notice that we really started to hit this huge level of supply above, which is shown by the anchored volume by price. And so what you'll see here is I anchored the volume weighted average price from this low here in February 2016, but I anchored the volume profile from this start of the megaphone pattern. And what I'm doing here is I'm trying to get an idea of what the volume profile looks like within this pattern. And so if I start it from where the pattern starts, I'm able to get a pretty good view of what the volume profile looks like. So what you can see here is, when let's say that you bought SPY on the dip, you bought it at the anchored VWAP here, the price goes right back up to 270, you're feeling great, and then all of a sudden you get this next move down. All of a sudden, if you bought at 260 right around here, which is where, a majority of the volume starts to kind of get heavy, you were down 16% in 2 weeks. So all of a sudden, you're holding at a 16% loss. The price bottoms out. SPY rips 20% in a week or a week and a half, whatever it was. You're like, once you get back to this zone that you bought at, you're like, I'm out of here. I'm getting out. I broke even. I'm taking my money and I'm reevaluating where, I want to be in this market. Enough people do that. That creates an imbalance in the supply and demand. As soon as supply starts to outpace demand, you'll see what happens. You've got these big wicks, which show that the price tried to move up intra-week, got rejected very hard at this, we can either call it a supply zone or a break-even zone. It's essentially the same thing. Anytime the price is below a volume bar, it's going to be a supply zone because anybody holding at that bar above is technically holding at a loss. So when we get back up to that level, supply comes back into the market. But we can also just call it a break-even zone because that's what's happening. These people who initially were holding an unrealized loss, break even, they get out of the trade, they add supply to the market, and you get your wicks like you've had the last 2 weeks. So that's what I wanted to mention on SPY. I wanted to mention on the Qs something very similar, except not necessarily with the volume weighted average, not the volume by price. This time I want to show you guys, how well the price respected the anchored VWAP from the, the February 17th candle here, which was just the week of February 17th. We actually topped out on February 19th. But notice what happens. The volume weighted average price acts as literally perfect resistance today at this week at 195 before pulling back and not really having a great close here. The one thing about the Qs that's really interesting is simply the fact that we are still actually in this uptrend that started in 2012 after the European stuff kind of blew over. This is kind of our start. Let me redraw that to make it a little more. Delete that. So essentially I'm just connecting this wick to this wick. And notice that I didn't connect it to this wick because this was just a massive liquidation point in 2015. This wick is pretty much showing that somebody got a massive margin call across the market. That probably was multiple people. So sometimes you got to kind of use the line of best fit. And so if we use the line of best fit, this is definitely going to be a better line of best fit here. Notice that the price action does not always test this area, but it's just a general area that price has respected and respected once again this month or last month in March. So, from here, the biggest kind of quote-unquote status quo area is going to be either to the upside through the anchored VWAP resistance. It's not, it was resistance last week, but that doesn't mean it has to be resistance again. It's more of a level of interest, as Brian Shannon likes to say, who is the creator of this. This is only resistance after the fact. We don't know if this will be resistance again or if this will just be another area that buyers are watching for sellers to come in. And if they don't, price could continue to move up. On the opposite end, if we break down through this support line here, which is, as I mentioned, more of like a line of best fit. If we wanted to make it a little more, accurate, we can always do a body-to-body candle and connect that candle to that candle. And all of a sudden now we've got a little more of a kind of hard level of support rather than just one line. I like to do this a lot because it gives you a little better idea of, what's going on. You're never going to have a trend line that's perfect. You're always going to want to really, connect the wick to the wick and then connect the body to another body, and you'll notice how these parallel lines really act as really nice support. So that's what I wanted to show on the Qs. One thing I want to show on United Airlines, which is really, really interesting here. One thing, we've got this area of previous support, which is clearly in a downtrend here from 2016. And if we did continue down on United Airlines, this would be the area that I'm watching. Notice that we did wick to wick here. So that means that these intra-week moves were very quick. So what we want to do is we want to create an alert at this line, and we want to make it as big as possible, right? We want to be able to capture some of that margin of error around the line. So whenever the price touches anywhere within this purple area, we will be alerted. So now we've done previous support. We'll say, alert me within 15 days if this area gets tested below. And the reason is because one, this is a weekly candle. This may not happen until 2 or 3 weeks down the road, or it may never happen. But, the point here is to kind of show you guys that we're on a weekly candle. If we right click and create an alert, we can actually have the 30-minute candle alert us whenever the price breaks down. So we don't have to wait until the weekly candle to close to get that alert. We now only have to wait for the 30-minute candle to close in this area to be alerted. So that's something that's really cool that actually just kind of popped up in my head. What I really wanted to show you is the monthly chart and show you guys how well the price respected this demand zone or this break-even zone here. So same type of thing. Notice here, we're anchoring the volume weighted, the volume by price from this bottom here. Notice that we did capitulate actually intra-month in July of 2008, but we actually had our lowest open on July of 2009. So I'm going to go by the actual lowest open here, and you'll see what happened. The price absolutely has gone up huge since this low. The price was up literally 2,800% from the bottom here. I mean, that's a lot of percent. So if we look at, from this particular point in time, we can see that a majority of the shares from July of 2009 were holding in this area. Let's just make it yellow. It's kind of a neutral area at this point. And we'll call it the break-even dash demand zone. It's essentially exactly what we just talked about on SPY, except the opposite. Here, you know, instead of going up into supply, we're going down into demand. So from this point, you know, I'm just anchoring, I'm not even anchoring anything. I'm just starting the measurement from the 21 area because that's our point of control. So if we start here and we see, you know, in November of 2019, the average person, or at least the majority shares, are up about 347%. Well, if you're up 347%, it's very easy for you to start taking profit when things start to turn. Well, enough people start to take profit, the price starts to drop. Oh man, the price just dropped huge. I'm still up 190%. I'm out of here. Enough people start doing that, you're adding a ton of supply on the market because all of these people are profit taking. But look what happens when we're dropping. Oh, we're actually down to 0% now. So now all of these people that were holding at $21 are now breaking even. They're the ones that stop selling because they can't sell for a profit anymore. As soon as all those people start to break even and stop selling, notice the supply dries up, demand starts to outpace supply, and you've got this little bit of a dead cat bounce. Notice here we gapped down into the wick, and we're really pretty much just going right back into this break-even dash demand zone. So we'll have to see if this actually holds, but the ability to see where these zones are is incredibly powerful. I mean, you know, this is something that has completely changed the way I trade. I used to do this manually, and it was really hard. Now I'm able to just move this vertical line. One thing I want to show you guys on MRO, this is a trade that I was in last week, made a horrible trade. I want to go over this just to kind of go over a lesson on, you know, sticking to your plan, but sometimes your plan doesn't work either. And so I want to go over this. Essentially what I did was I drew this, this area of two support lines, and let me pull up the Williams percent range. What you'll see here is what I was doing was I was looking at the price. I was looking at the Williams percent range because the Williams percent range is definitely my favorite oscillator to find divergence on because it generally is going to signal divergence before the RSI. But what you'll see is, you know, something pretty interesting. We've been slowly and very, you know, you really have to zoom in to find these higher lows here. And actually, it starts here. So you'll see here, you've got this this low here, and I'll just move this over. You've got this low here, and we're way up at $8. We then hit this low here on March 6th, and we're at 370, but we hit a higher low on the Williams percent range. So as this divergence was playing out, finally at, like, you know, on this day here, I was like, okay, I'm getting in. Well, I got in a little early. The price started dropping. I was using the trend line as a function of the body, not the wick. Whereas, remember, on that QQQ chart, I did body to body and wick to wick. And if I would have done that, I would have seen that we actually were still holding the trend line wick. Instead, I sold my shares at 312 on this trend line breakdown, and then we've got a reversal the next day. So, you know, the point is, in this particular case study, always draw your support body to body and wick to wick so you're able to capture those crazy extreme wicks that are absolutely still relevant. And this is a great example here. Notice that this area was the bottom, and I was more focused on the body to body trend line. I absolutely blew that, but it's a great lesson, and it's going to only make me a stronger trader. I'm very happy to talk about, you know, losses in the market because those are the ones that really stick with you. Your wins are generally what create ego, which down the line will generally mess you up. So, you know, talking about your losers is just important as your winners, and this is one that I absolutely got, you know, my butt handed to me last week. But if I would have stuck to the plan, I know it would have worked, and now I know for next time. So just an actual real life trading example from last week that I made a mistake on and wanted to share with you guys. The last thing I want to share are raindrops, and raindrops are probably the easiest way to find an edge in the market right now. Here's an example on CGC. Notice if I highlight this candle, you'll see that these two candles are the same. And notice something really interesting. Obviously, this is a pretty strong candle. We had a close above the resistance line here. But notice what we can see when we turn on the raindrop. And the raindrop is simply a volume-weighted candle. So you'll notice instead of a bar chart with your left bar as your open and your right bar as your close, you've got your left bar as your volume-weighted average price for the first half of the period. And then your volume-weighted average price for the second half of the period is the right bar. And what you'll see in this particular example, the volume profile, which is the second layer to this candle, is showing that most of the volume was focused at the top of this day's range. This is a daily candle, so this is the day's range. If this was a 30-minute candle, it'd be the 30-minute candle's range. However, we can see that there was really true conviction by the buyers here, because you can see, even though it looks like sellers came in and pushed the price down, for all of those sellers that came in, there was a buyer here to absorb all of that supply, and then that created the base for the next move up, which was quite a fun move to play the last couple weeks. Another thing that's interesting, if we look at CGC now, notice that we've really kind of respected this horizontal level here. Notice what happened on Friday. We broke down through this candle, but we don't have a lot of information about this candle. If we go to the raindrop, we'll see that, look at how much volume was actually focused at the bottom of Friday's second half of the day. We can see that there was actually new lows created during the second half of the day, because all of this volume is shown during the second half of the day. Well, on the left-hand side, it's flat. So we know that there was no volume during the first half of the period during this price range. We know all of this volume started pushing down price during the second half of the day. So these raindrops really give you a perspective on just volume flow in general, and it's really important to be able to compare these to the regular hollow candle to see what's going on. Last thing I want to do for you guys to get an edge into next week, we do have a scanner to look for these types of setups. So we have the scanner as daily raindrop balloon, and then I looked and I scanned for the Russell 2000 and looked for any balloon raindrops. VIRT, never heard of it in my life, probably won't trade it, but it is something that popped up on the scanner, and I did have to do a little bit of manual kind of analysis here, drawing this resistance line, seeing that there was a nice breakout, what we call balloon breakout here. And you'll also notice on the daily candle, the same thing. We've got a strong confirmation here of buyers in control from just a function of the open and the close, but you'll also see the buyers were in control from seeing how much of that volume was focused above this trend line. So this is an idea into next week. We are not advisors. We are not licensed to give advice. But if you're using the platform and you do a raindrop scan on the Russell 2000, this will be a setup that pops up that is kind of interesting when we just looked at the CGC setup and saw what happened after this type of formation. Nothing's 100% in the market. This does not mean that we're going to get a gap up and rip next week. It's just something that, it's like blackjack, right? If you have a 19, you're going to be pretty pumped. But that doesn't mean you're going to win the hand. It just means that you've got a higher probability of winning. So that's the way you should look at these setups, as a probability rather than a guarantee or a guaranteed loss. It's more of being able to get an idea of what the market's showing us, but you still have to have your own discretion and see other parts of the market. You have to look at the relative strength of SPY. There's all different types of things going on. If CGC I took last week on this move up because SPY was finally showing some strength, and so I was comfortable, taking this trade. I think on March 24th, essentially I bought because a lot of the volume was kind of focused at the top, and we had broken through this area. But this wasn't the main reason I took the trade. I still had to go into a smaller time frame and confirm that. So this is just one thing that's in your arsenal. You're always going to have multiple tools in the toolbox to take advantage of a trade. TrendSpider is a fully geared technical analysis platform for any type of trader, not just one type. So definitely make sure to check it out. There's all different types of features that may be able to help you. And if you have any questions at all, please feel free to reach out. Make sure to subscribe to our channel for more videos like this and comment below. Thanks so much and have a great weekend.